Hey everybody, it's Amy Schrader with Remax Real Estate 10.
Kim Small with Mortgage Investors Group.
And we are so glad that you have joined us again today. As you know, every Wednesday at noon, we have been bringing you all this live series to kind of break down the home buying process for you. So today we're going to be talking about the 10 commandments of buying a home. And these are things that we have come up with that we found that buyers have had issues with in the past. So some of these we're going to, give them to you and you're going to be like, well, that's just common sense. But they have happened. So that is why we're going over these. So the first one that we're going to cover is thou shalt not change jobs, become self-employed, or quit your job. So again, you would think that that would kind of be common sense, but I had a closing, or I had a deal. It didn't get to closing. Had a loan officer call me and say, hey, great news. We're cleared to close. We're going to schedule it for next Wednesday at 5 o'clock. And an hour later, she called me back and she had to cancel that closing because the buyer had lost his job 2 weeks before and didn't think to call anybody and let them know. So it does happen. So, if you're getting a promotion where you work, then that's one thing. But to actually quit one company, go to work for another company, that can definitely cause problems, huh?
Big problems. And basically your employment is re-verified within just a couple of days of the loan closing. So you may think, well, my lender's not going to know. I'm just going to, change jobs, not tell her. But we do that. We've had them same way. We've had them stop the day before closing or day of closing because we got notification that those people no longer had their jobs.
So you don't want to do that. The next one is thou shalt not buy a car, a truck, a van, or an SUV. And I always like to say, or you may be living in it. Any kind of big purchase like that, when you got qualified with your lender, they look at what your debt to income is, and that's how they've qualified you. So when you, trade vehicles or purchase a bigger vehicle or whatever, that payment could knock them out of buying the house.
And same thing there, you may think, oh, my lender won't find out, or she's already told me I'm approved, so she's not going to find out. Kind of like the verification of employment that's done at the end. Another thing we do is we monitor that credit report all the way through the day of closing. So if you go the morning of your loan closing and you do buy a new car, that's going to come up. And again, that means that new payment's got to be worked into your debt to income ratio. And even if you were approved, you're either going to have to go back through underwriting and be reapproved, or like you said, sometimes it does create a loan to be denied at that point.
Right. All right. Number 3, thou shalt not use charge cards excessively or let your accounts fall behind. So these are kind of a repeating theme here. Like Kim just said, the lender is going to be monitoring your credit report. So when you fall behind on an account and it goes, 30 days late, they're going to get a notification of that. And that could knock you out of being able to buy the house because it can drop your credit score. Again, the debt to income ratio. If you've got a $10,000 limit on your credit card and you charge it up to $8,500, that monthly payment's going to increase. So,
And another case we had one time that was a borrower had a medical collection that came up on the credit. And I'll be honest, it came up on a Friday afternoon. We were closing Monday morning. And it was like a $5,000 medical collection. That required, because of the dollar amount, it required that we report their credit. And when we did, the credit score had dropped. Again, we were still able to close, but the bad thing was their interest rate went up because their credit score was lower. So.
All right, moving along. Number 4, thou shalt not spend money you have set aside for closing. If you have went into, the transaction knowing you're going to have to bring maybe $1,000 to closing, and you spend that money, mom and daddy can't just give you that $1,000 and you bring it. They may be able to, the lender may be able to work that out. But again, you're going to create unnecessary stress on yourself, your realtors, your
And
lender,
your lender.
and the seller, if you do that. So if you know that you're going to need that $1,000 that you're getting back from your taxes, don't go out and spend that on something else. Keep it there for that. Do you have anything on that
Well,
one?
and they're basically, however your loan is approved, if your loan is approved with you're using your own checking and savings, you're using gift funds, however it's approved is how you actually need to close that loan. You know, you don't need to say, well, I'm going to tell you I'm getting a gift, but I'm actually going to go here and borrow the money or something like that. That gets, we
That's
discovered
where we get into a problem.
We discovered that as well.
Yeah. All right, number 5, thou shalt not omit debts or liabilities from your loan application. Your lender is kind of like the FBI, and they are going to know whatever you do. So, let's say Kim pulled your credit report today, and she goes over your liabilities with you and says, okay, it shows that you have a Sears card, Discover card, and that you're paying TVA Credit Union on your automobile. You're like, yep. Although over the weekend, you went to Rooms to Go and opened a new credit line for $5,000 so you could buy furniture to put in your new house. Even though that's not on your credit report at that time, it could pop up and she can find out. So if you've done anything like that, you need to let Kim know.
And that's it. We're on your side. We're not here to try and not allow you to purchase a home. We want you to be able to buy that home. But we need to know everything up front and through the process. If something changes, you've got to let your lender know, hey, here's what's going on, so we can hopefully take care of it at that time.
Right. And that kind of led me right into number 6, thou shalt not buy furniture. A lot of people do this, or a lot of people will go to Lowe's and buy a new refrigerator or a new washer and dryer to go in their house a day or two before closing. And, the same things we've been talking about, your lender's going to know, and it can hold up your closing date. So, just get to the closing table, get your paperwork signed, and then go out and do that furniture shopping, do that appliance shopping, whatever it is that you may need for that house.
And lots of times, I've had people like with Lowe's and Home Depot, sure, you need that refrigerator the day you move in, but a lot of times you can go there, pick it out, and just kind of have it ready, but just don't charge it, don't purchase it until your loan has closed. And another thing about the furniture, 90 days, same as cash. A lot of people think, well, that's not a loan. I've got 90 days to pay for it. It is considered financing. It is considered a loan. So whatever, if you buy, $10,000 worth of furniture and you got 9 days to pay for it, we've got to count that as a monthly payment as well.
Right. All right. Thou shalt not originate any inquiries into your credit. Excuse me. And that's kind of what we've been talking about with some of these others. If you go to Lowe's and you want to buy that washer and dryer and you're going to put it on credit and they pull your credit, that's how your lender finds out, is when that credit inquiry goes onto your account. And then they're going to have to call you and say, hey, Lowe's pulled your credit. Did you go out and buy something? So on and so forth. So, thou shalt not make large deposits without first checking with your loan officer.
This is one I think we battle a lot. I don't know if it's an East Tennessee thing. And I understand a lot of people like to have cash at home or got mattress money or whatever. But with any of the loan programs, or all loan programs, if you make cash deposits, we have to source any of those deposits, especially if you're going to use the money for closing. And then some of the loan programs that's income-based, if you've got these cash deposits going in there, they want to know, hey, is this a side job? Is this more money you're making? Because, since there's limits on what the income can be, that could potentially be additional income that would take you over their threshold. So.
Okay. And I'm sure you're like me. I've had people say, well, I had a gun that I sold and, I just put the money in the bank. And you think, okay, well, there's no way they can trace that. Well, they're going to want a paper trail. They're going to want a bill of sale. They're going to want something. So, if some of these circumstances come up while you're in the process of buying a home, talk to your loan officer before you do anything, because they're going to tell you the easiest way to handle that so that you don't cause a delay in your closing. All right, we got 2 more we're going to run through real quick. Thou shalt not change banks or accounts. Again, if you're depending on money from close, you don't want to close out your First Tennessee account and then go to SunTrust and open a new one. you don't want to close your account that they have sourced and seasoned your money and put it into a new account. So that one's kind of self-explanatory, I think.
It is, yeah, that's definitely.
And then number 10 is thou shalt not co-sign a loan for anyone. Not your mama, not your daddy, not your sister, not your kids.
Oh, yes, that can be a big thing. Basically, if we pull your credit and you have a co-signed debt on there, the only way we don't have to count that into your debt to income ratio is if we can prove that the person you co-signed for has made the last 12 payments. So if it's a brand new loan and there's not been 12 payments made, then that's considered your debt because there's no proof that the person you co-signed for is actually going to make the payments and pay for it. So.
All right. So that was kind of the 10 commandments of buying a home. And I know it sounds like, well, that just seems extreme. I can't do anything. But, you know, as Kim stated, they want to help you buy a house. But these are things that we have seen come up more than one time that have caused issues for people in their home buying process. So, you know, like I said, as a general rule, if something comes up, just talk to your loan officer before you make any moves to do anything. So that wraps us up for today. Next week, we're going to talk about, okay, I'm pre-approved. What do I do now? And we're going to kind of walk you through the next step of that process. But it's every Wednesday at 12 o'clock. If you can't join us live, of course, the video will be posted to our Facebook pages, so you can always go back and, you know, watch it at your convenience. If you or someone you know are looking to purchase a home this year, then we definitely ask that you, you know, share this with them. Leave us a comment if there's a topic that you want to see covered in a future episode. So thanks again for watching, and we will see you next week.
Thank you.